Hey everyone, in this video today, we're going to look at a very simple strategy for beginners on how to invest in a stock and how to time a stock to reasonable extent. Now, a lot of people have, if you talk to many big managers, mutual fund managers, they would say that it's impossible to time markets, right? Now, I disagree to that to an extent, and I feel that you can time markets to an extent. And today we're going to look at this in this video. Now, I'm primarily doing this because for beginners, there have been a lot of people who have been asking me, how do I go about investing? How do I go about trading? How do I start technical analysis and how I can take advantage from it? So I already did one video on how to use TradingView, and that is a prerequisite to watch this video. So if you haven't watched the TradingView video on how to use TradingView for charting, then please watch that and then jump on this video, because without that, this video wouldn't make sense. So if you're a beginner, first check this video out and then come here and also check this video out. And this video can give you multi-bagger returns with this simple strategy that today we're going to look at. Okay, so let's jump into the video without any more delay and let's look at what I have in store. So as I said, you need to have TradingView access. I need to log into TradingView here and need to look at the stock that you want. You can go here and type the stock you want and you can get into that stock. So I'm going to use gold today for this video because it's one of the most widely understood instruments and even a beginner knows gold. So we're going to look at gold and look at how we can, identify, trade this strategy. So before that, I wanted you to also reiterate that you want to be in the monthly time frame. So just going to hide this one. So you want to be in a monthly time frame here. So I've also spoken about this time frame in that TradingView video. So it depends on which time frame you choose. You want to, you're going to catch longer the trend. So the bigger the time frame, so in a monthly time frame, you're going to catch much bigger trends and probably going to catch multi-bagger stocks, which can potentially be long-term stocks as well. Okay, so it's a simple strategy that we're going to look at today. So I'm going to choose monthly and I want to look at gold. So now as soon as you open a chart, now what you want to look at is you want to look at a zone where price has gone up and again come down at least 2 times. Okay, so you want to look at a zone, right? So if you look at this entire chart, so first zone was here, right? So the price went up and then came down, right? So that's the first zone we are looking at. So I'm going to mark that zone there, and I'm going to extend that. Okay, so I'm connecting that point. I'm using a rectangle and I'm going to just extend that zone, right? Now, since this is just forming, let's ignore this and let's take another point where you see there has been multiple reversals from the same area. So if you just keep the mouse cursor there and you do an Alt H, okay, use the shortcut Alt H, it will draw a horizontal line. Okay, so you want to find the chart or the price of the stock that you have, and you want to identify points where a stock has been rejected multiple times. So first time the stock went here, came down, it went again up, then it came down, and again it went up, came down, and tried to go up, it couldn't go up, and finally we had a stock price moved above that line. So this is nothing but a breakout. Okay, this is the most simplest forms of breakouts in terms of technical analysis. By breakout, what I mean is the stock is able to cross a point or a line or an area of a price zone, and it's able to go above and stay above that in that month's time. So in this month, if you see, this pattern started back in 14. It tried to cross first time, it couldn't cross. Then it tried in 16, it couldn't cross. Then it tried in 18, it couldn't cross. Then finally in June 19, it was able to move out of that zone and it crossed higher. So that is called a breakout. Now what, in terms of psychologically, what has happened here is, now since gold has been an uptrend, a lot of people started booking profits, and then the price started dropping. Right now, remember, gold is considered as an inflation hedge, and long-term gold finally heads higher because we are going to have inflation always, and since it's an inflation hedge, gold will keep moving higher. But since a lot of people started booking profits, since they made so much money in gold, it started coming down and it started going sideways because there's so many people who are selling, and people who have bought here keep selling, and they start booking profits. And since the sellers are more than the buyers, what happens is the stock keeps going sideways. Right, but the sellers will not always be more than buyers. Always the demand, the number of buyers at some point will move beyond the sellers. So what's happening at this point is, since there are sellers here, people sell and the stock comes down, and again people buy at this point because they find value. Again the stock goes here, but then what happens is people who bought here again sold here because they want their money back, because people who bought here are in losses, right? and then they come up, and then again these people want their money back, they sell off, and then it again comes down. But there are people who also find value in gold and they keep buying this bottom, right? But again, when it goes up, these people also book profits, and these people also who bought here, who are stuck at these levels, also book profits, and the stock comes down, right? And this pattern repeats. Okay, remember, I'll just make a point again. People who bought here are booking profits, so the price keeps coming down. But again, at some point, people find value and they buy the stock and or buy gold, and it goes higher. But since a lot of people bought here and they are stuck and they are losses, they kind of book profits also. And people who bought here also book some profits. The price starts coming down. Now again, when it comes down, people who missed this move kind of find value again. They want to buy more, so they buy more, and the price again goes up. But now there are a lot of people who are stuck here and stuck here. And so what happens when it comes here, they kind of sell again and the price drops. Now this keeps on happening, and at some point that demand supply, or the buyers and sellers, the balance shifts and it heads on to buyers. So now there are more buyers than sellers. So what happens is the price kind of breaks out and it now starts heading higher. Now this is a typical cycle in markets, and the simplest way to identify is to draw a simple line and to find two touch points. Now that's the rule I'm going to put here. Try to find 2 times when the price has gone up but it couldn't cross and it has come down. Now that's the price point you want to focus on, and you want to see that the stock is around that price point. It comes back again, and then the more than 2 touch points is perfectly fine. So in this case, the price again touched and came down, and as I said, you need minimum 2 touch points, and third touch point is very good. And when the price crosses that point and crosses higher, that is the time you have to buy the stock with a stop loss around that zone, or you can even keep a stop loss as close as that point, right? Now in this case, the stock gold kind of crossed above, then you buy this point and then you ride an awesome trend in gold. So from 1200 it is today trading at 1800, and our gold doesn't move much, but still that's a very excellent move in gold. Now this is a strategy. I'll repeat again, 2 touch points minimum, and they should be at least a few months apart, at least 3 months apart. Now in this case, this was in 2014 and this was in 2016, so that's 2 years apart. And between this and this, again, we had 2 years apart. So almost, 2 years apart, right? But I just need 2 points, and third time it crosses, you can still buy. Okay, I don't really necessarily need this, but the more the touch points, or the more the time the price is reversed, the better the breakout will be. Okay, now let's look at a few more examples. Okay, so let's take one of our favorite examples, which is Hindustan Lever. Now everyone uses Hindustan Lever in our house, some way or other way. So let's look at Hindustan Lever, same monthly chart, and I'm going to look at the history, right? So history, we're going to look at this chart in the past, and if you see here, this stock first attempted to cross in 2000, it couldn't cross and it came down, right? Now the stock came again to that zone after 6 years. It came again to that zone in 2006, it couldn't cross, it again came down. Now again, after 2006, it came again 2009, after 3 years, it tried to cross, it couldn't cross, it came down. Now finally it crossed that zone in September 2010. So after 10 years, Hindustan Lever crossed that zone. Now I call this a time period, right? So this was a 10-year breakout. So the longer the breakout, the higher the price movement would be. Okay, so there's a saying, the longer the base, higher into space. Okay, so the first rule is you should have at least 2 touch points. They should be at least 3 months apart. And the third one is, if it's a longer the base, higher the stock can move higher. So that's not a rule actually, but that's something you don't know. Now, when the moment it breaks out, you buy at that month and you keep a stop loss just below the recent low. Okay, and then the price starts moving and it heads higher and higher and higher. It just keeps going higher and higher. Now again, the stock had a similar pattern in 2015, right? 2015. So the stock went from 290 to almost right now 2500, right? Now if you see the stock here again, 2015, it tried to cross that point, couldn't cross. Then after 1 year, it tried to again cross, it didn't cross. Now that's the second touch point. Now for me, now if it crosses and closes higher, for me it's a buy, right? So I buy when it crosses the third time here in 2017, and then I'm going to keep my stop around that point. Simple lines. You have to just know how to draw that line. Rules: 3 months apart, 2 touch points, and look for bigger bases. Okay, anything more than 1 year is totally fine. You can go ahead and buy that stock. Okay, and then you can ride such massive trends. Okay, now this is the second example that I wanted to show. Now let's look at a few more examples, and also we look at a few failures as well. Okay, so next one I want to look at is JSW Steel, which had also an excellent breakout some time back. Now, some people might say I'm looking at past examples. That's how you learn, right? There's no other way to learn. Now, JSW Steel also in 2007, if you see, it had tried to go high, it couldn't. Then again, it tried to go high in 2010, it couldn't. Then again, it tried to go high in 2014, couldn't. And finally, it had a breakout in 2016. Now, since then, the stock went high. It again came down. It didn't go below that level. Now, that's a breakout retest. Now, we had a breakout. And if the stock comes back, that's also a good point to buy. Now, that's the fourth touch point where it reversed. And now it's trading at 680 levels. Right? How simple is this strategy? Do let me know in the comment section if you did like the strategy. We'll look at a few more stocks before we conclude this video. Okay, and we also got a few more failures. And this, not every strategy in markets is holy grail strategy. Some stocks might do well, some stocks might fail. So the next stock I want to discuss is Maruti, which most of us know. So let's look at Maruti also. So Maruti had an amazing pattern back in 2009, right? So in 2009, if you see, first time it was there, then again tried to cross in April 2013, and again 6 months later, again tried to cross. So you buy at this point. So I'll just zoom in a bit just for you to understand it a bit more. So in 2013, it finally crossed and closed above. So what you have to do is buy it that month, and then you kind of keep your stop loss there. And if it dips, you can still continue buying, right? And then this time when it crosses above, you can still add more to your portfolio. And then it went all the way up. From here, it went almost right now it's trading 7,000, right? Now again, this pattern is again forming, right? You see it tried to cross this high in 2018, it couldn't. Now again, it came back in 2019, it couldn't. Here again, 2020, it couldn't. And now again it's trying. So this is the 4 touch points, and this is also an inverted head and shoulders. I will also make another video of that, but this is again another pattern, and I don't think we're going to see levels of 6,000, 7,000 again if Maruti closes above this level. So Maruti is again a very good stock to buy for the next many years. Okay, 2 more stocks, and then we'll move into the failures. Okay, so I'm going to look at Nestle. Now this pattern is applicable even in mid cap, small cap, any stock. So you can go ahead and look at all these stocks, right? So Nestle had this similar kind of pattern breakout 2015, right? It again tried to cross in July 16 after a couple of years, and then again it had a breakout in November 2017. Now when it broke out here, you buy that stock, with a stop loss around that point, and you kind of had a breakout again. It kind of dipped, but it again moved very well, right? Simple lines, no mathematics here, simple lines. And if you're able to find such stocks, it's very good. I'll also discuss a scanner later in another video for this, and we can discuss about that. Okay, so last stock that I want to discuss is Reliance. Reliance also had a similar pattern, right? So if you Reliance, if you see back in 2009, it first tried to cross, it couldn't cross, then it tried to cross in 2014, and finally here it had a breakout in 2017 around 800 levels, 550 levels, 560 levels, and today the price is around 2,500, right? So that's how strong. This is the most strongest setups in terms of technical analysis. You go to Twitter, you go to any YouTube video, this is the most powerful pattern, especially when it's more than many years. Now in this case, Reliance, it was 2009 till 2017, right? So that's more than a 8-year breakout. We saw Hindustan Lever 10-year breakout. So similarly, there are a few more stocks which are forming right now. One of the stocks that I'm watching is Gravita. Now Gravita is also breaking out from a similar pattern. Now if you see, this had a breakout in October 2021, finally closed above that zone. So I have a position in this, and if it heads higher, this can do really well going forward, right? Now, obviously, this is not a holy grail strategy. Not everything will work out. There are some failures, and I'm going to show you some of the failures so that you don't think that I'm fooling you around. So one is GAIL India, which had a failure breakout back in 2000. So if you see, we had a similar touch point here, right? So we had 1, 2, 3, right? So it doesn't have to be perfectly touching. Little bit here and there is totally fine. And we had a breakout here in this month. If I had bought here with a stop loss here, you'd have been out of this. In fact, you'd have been out even here, right? So this was a retest, and then we had a breakdown there, right? So the same thing which applies on the upside also applies on the downside. If you see, we had 1, 2, and this was between many months, and we had also breakdown. So that's the point. You should have exited the stock. You shouldn't have held on to the stock anymore, right? Also, I'll take a example of ONGC, right? So ONGC also was a failure breakout. So I'll just remove that line there. But if you see, this was a breakout there, but it was a complete failure and it came down. Now this pattern has a very high probability of success, around 77 to 80% of success, especially when it's hovering. If it is more than a 5-6 year breakout, then definitely you must trade that stock, especially if it's fundamentally very good. Then you can give you really good returns. Okay, now I want to show you how to avoid being in stocks as well, right? So many stocks can do this the reverse way. Now, for example, if you see in Yes Bank was trying to go down here, then it tried to go down again, and finally it went down. So that's the 2 touch points. And third touch point, it kind of broke down, and we had a gap of few months, right? So it had a breakdown, retest, and it just came all the way down. So don't hold on to such stocks on the when it's coming down. Also, it's also very bad. And I want to show you one more stock. Yeah, that's all I had. So a simple scanner that you can use is I'll probably look at the scanner today, so that you can also take that as a learning. So you can go to Chartink and you can kind of create a login, right? So you can log in to Chartink, and there are many scanners available for this, but I'll show you my scanner. I'll just modify the same weekly scanner that I use. I'll show you how it can be used to identify such stocks. Okay, so what you have to do is I'll post this link also in the description, so that you have this for your use. Okay, so go to monthly. So you go to monthly here. You just change this to monthly. The same scanner that I have, change it to monthly. Sorry, it's taking some time. So monthly. Yeah. So you click on monthly, CC34 crossing above 100, and then you can use these filters. Don't use if it doesn't matter. So once you get a stock here, right? So you'll get many stocks here. You have to go through them one by one, and then you come here and you try to find that point, right? For example, let's take a Nestle, right? Or let's take a Maruti, right? Maruti is right now doing that setup. So you come to Maruti here and you try to find, you try to draw that line, right? And then you see RSCCI is crossing just above 100, right? So if you see this point here, it is just crossing above 100, and you see this number over here. When I keep here, you see that number over on the left hand side, CCI is 109.3. So it is exactly crossing this month. In fact, last month it was around 98.62. So this month, if it crosses above that, CCI will be above 100, right? And you will see that candle closing also above. Now, sometimes the candle might not close even though it's coming in the scanner. So wait for the candle close, and then you can enter the stock. Now, if you look at here, this also was one of the examples here. If you look, CCI kind of crossed here itself, but at this point there was not multiple touch points, but then we had multiple touch points coming later, and finally we had a close above that point here, right? Also CCI was above 100, right? So that's a scanner that I wanted to share with you also. And also always use swing low as exits, so that can be used as a very good swing exit. Okay, so that's a simple strategy, just using a line. If you're able to find such charts using a scanner, that is going to give you really good rewards. Just allocate 5% of your portfolio to that stock. Let's say you had 1 lakh, just allocate 5,000 and let it be there. That stock will give you much higher returns, especially if it is a good company. Okay, so that's it for today. I'm going to leave you here. Take care, and if you did like this video, do share it with your friends, and do subscribe to my channel, and do like my video. A lot of your friends and colleagues would not know the simple strategies, so share with your friends also, and let this community grow further. Okay, take care. I'll leave you here. Bye bye, and stay safe.